This conference will now be recorded.
Affecting also the economy as a whole, not just at national level, but also at global level. We have never seen such the degree of drastic measure being put in place in recent times also, and that's creating a high degree of stress, attention, and also questions in terms of what are the measures that are working, what are the measures that are not working. We need, and we have said that before, we have said that in previous exchanges that we had last week, a high degree of anticipation, and that's what IOE is trying to do with all its resources, trying to anticipate using all the digital tools to give answers to our members and to the business community, with also a sense of urgency, but also with a sense of responsibility, which is needed more than ever. What we face now is also a situation in which we see many governments putting into place economic, financial, social measures, which are not the same, which are very diverse, and where employers and where business have some uncertainty in terms of what really is going to make a difference, what is the impact, what is going to be really worth investing, bearing into consideration that this situation is unique, but also bearing in consideration that we had past experience from financial crisis and for economic crisis, which should be also helpful to us. So what we wanted to put together is a group of experts, a kind of mindset working together to identify measures, to identify actions which could also help us to go forward, to move forward as business community. I want to thank all the participants, but especially to the panelists. What we have managed to have here is an incredible set of representatives of different organizations. From the OECD, Stefano, thank you so much for joining us. From ILO also has recently produced a kind of estimation of job losses. Also, OECD has put together a kind of good set of measures that have been taken by different governments. We also have, and thank you for joining us, a good representation from the German Economic Institute, which is also going to refer also to predictions that have been made recently and also regarding this crisis. And we have to say also that Germany has, in the recent times, at least in the financial crisis, down, I mean, optimally, at least that's how we see from the external world. And that could also help us to identify good measures. We wanted also to have a representation of employers and business organizations, and that's why we asked Renata Horundal, that apart from her role in the BDA, is our vice president for Europe, and also has an important role vis-a-vis our friends of the business community before the OECD, BIAC, since she is the chair of the ELSA committee, the committee which is dealing with employment and labor. And we also have two other experts. One of them is Jose Manuel Salazar. Well, he has been working in ILO. He has been also Minister of Finance and Economy, correct me if we say it wrongly, but also has an important expertise of what's coming in Latin America. He's also now being very active, also trying to predict what kind of measures or what kind of focus we should put, especially in the productivity angle, to overcome the crisis that is coming. I also want to thank Raymond Torres. Raymond Torres was the former director of research of ILO, but now is director of research in a very prestigious institute in Spain, which is called FUNCAS, and he's working also with other expertise around also what could be the situation, the economic situation. We have not much time. I want to optimize the time. I want to thank all of you for participating. We have more than 100 registered participants. And I want to start giving the floor to Sangheon. Sangheon, thank you for joining. You have the floor. You have more or less, I mean, we agreed that you will give perhaps a setting this thing with a little bit more time. So the floor is yours. And please use the panel that you have aside to make questions. We'll try also to put all the questions to the speakers simultaneously so that they are able to answer as soon as possible when they are written. Okay.
Okay, thank you so much, Roberto. Actually, again, thank you very much for inviting me to this very exciting event. Let me can you
Yes, we
see
are.
my slide?
Yes, we are seeing your slides.
Okay, good. Okay, right. Okay. Probably I am first actually panelist to speak.
अरे they started, I heard him talking. Presentation सुरू झाले पहिलं. मग आता एक काय नाही.
Okay.
मध्ये मध्ये येते मध्ये मध्ये.
I'm the first on the panel list, so I probably focusing on the overall situation and the policy responses, as I believe the other speakers, including my former boss, Suarez, I will focus on the many important specific issues. Let me start actually by saying this is not just a health crisis. As you know, this is already economic and labor market crisis. I think it's already very clear that it will affect every single person in every corner of the world. So in order to highlight this point, the ILO did a bit of a tentative, very rough estimation, which we feel already preceded by the latest worrisome development. Our very much initial estimate points to very significant rise in unemployment, likely to the range of the 25 million. As I said, now it's already rather optimistic. And also we have to remember, even before the crisis, we expect there would be around 188 million unemployed workers this year. So it's quite a serious situation. Also, this high number of unemployment will be eventually translated into large income losses for workers. So again, we did a very quick calculation, but the loss will be up to around 3.5 trillion US dollars. Again, this is a bit optimistic as well. And for individuals, this income loss means less consumption, which will create a downward spiral for businesses. And so we need to prevent this negative feedback loop actually from forming. Otherwise, the economic and social devastations will last much longer than the virus outbreak. And also, we look at some possible implication of the working poverty. We expect around the increases by the 24 million. We initially expected that this working poverty would decline by 14 million worldwide. So, but this year, probably we have to see the increase rather than decrease in the working poverty. Again, this will have the devastating consequences for families, especially for poor families. Wherever the situations are, they find increasing difficulties to invest in health and education, which may impact on their productive capacity as well. Of course, there are certain sectors are more affected than others, and especially we are worried about the implication for the inequality, which is already very high. We're concerned about the youth and the young and women, and also the workers and informal and migrant workers. So I already explained this. And I think it's just whatever prediction we are making on these key employment indicators, these numbers should be seen in some context. I just want to mention first, one is that when we had a crisis last time in the 2008, our estimate was that around 22 million workers were unemployed at the peak of the crisis. That was 2008. So the even optimistic number I mentioned, we are talking about a very large number, very serious crisis here. Second is that the unemployment is not everything. So there are a huge number of unemployment which will increase during the crisis. This means the workers may have see the reduction in working hours and wages. And another thing is since the finance crisis, as you know very well, we have seen quite significant increases in the new forms of employment. Of course, some are good as a stepping stone, so many others are not very good. And these actually, so many of these actually workers in these new forms of employment do not have appropriate social protection coverage. And also the self-employment, which sometimes act as a cushions, may not be viable option because of all the limitations impose on the movement of people at this stage. And also the one important context is that there is increasing disillusion with the multilateralism and also the rise of nationalism. All this actually makes it very difficult to deal with the threat which does not recognize borders. So the national economies right now to interwoven now to be able to solve these employment and economic issues in isolation. There is a really high demand for working together, but the current geopolitics is not necessarily conducive to that. And what will be the policy responses? Actually, the policy responses should focus on the two areas we believe. First, of most importance is the health protection measures, and also important economic support measures, which affect both demand and supply side. And workers, the employers and their families should be protected from the health risk. This requires large-scale public support and investment, especially the paid sick leave and teleworking or improved measures relating to OSH. These all can help. And also the timely and large-scale coordinated policies will be needed to protect employment and also help businesses and support income. So we need to stimulate economies to avoid a prolonged economic recession. In particular, we need to keep people in work so that they can support themselves. As you know very well, many national governments are taking action already with large stimulus and the support packages. But in our view, it is vital that these packages focus on the ordinary people and ordinary businesses, not just about some larger enterprises or the financial system. In that perspective, we propose a three-pillared approach, as you can see from the screen. This is based on our lessons from the previous crisis, not just the financial crisis, also crisis on the SARS and MERS. The first one is, as I mentioned briefly, it's very important to protect workers in the workplaces. I don't need to repeat all the measures, as you can see on the screen. And also, it is very, very important to stimulate the economy, and in doing so, boosting labor demand. Here, we are looking for the very proactive fiscal policies, and also accommodative and monetary policies, and also lending and the financial support to specific sectors, for example, in health sectors. And also, third pillar of our approach will be on the supporting employment and incomes. I mean, probably I don't need to explain further how important the social protection is in that respect. And also, we think it's equally important to have strong measures to protect employment through lots of the measures, including short-time work and paid leave, and other subsidies, employment subsidies or wage subsidies. And at the same time, providing financial and tax relief for the micro and small medium enterprises. I mean, there are many options, including tax holidays, loans, and also supporting for the wage payment. I mean, some of these elements already in place, but we need much more than now. And this all required actually multi-track approach, actually, which should include stabilizing livelihood and incomes. And here, as I mentioned, they bring together social protection and employment measures, and also local economic recovery. They are all important. And there is already big actual effort already made to extend unemployment benefit, which is good, but we need more. And social protection systems are so critical in supporting workers and also at the same time enterprises in times of crisis through the measures like the extended healthcare and income support. Of course, this will eventually help to stabilize the labor market and social system. Fiscal measures like the government tax and then spending on unemployment benefits or others, I mean, they're all useful, but they are not sufficient. It's critical, but it's not enough. We need a full toolbox, including, for example, job guarantees and all support measures for business and the healthcare system, and even including available ad hoc payments. And also, important thing is to provide the necessary support for the self-employed. In nutshell, I think what I'm trying to say is that we need to keep as many of the economic wheels turning as possible. We all need all measures at the same time. So the good news is countries are already in action, as I mentioned, but actually we need definitely the more and take more actually speedy actions in that respect. One thing about the role of government here, I think the role of government is crucial here. I mean, in terms of the boosting confidence. So the sort of the whatever it takes approach is a good start. And we really hope to see the large intervention to keep actually things going until a demand-led recovery is possible. And employment promotion measure is critical, possibly including employment services and linking up to with this vocational training. That will help actually workers actually made redundant that they can restart. And this crisis will eventually affect all businesses, and this business will be distressed because the economy, the activity has gone to the court, but that is not necessarily their responsibilities, and that's why we have a strong reasons to provide all necessary support for business. I have to emphasize the importance of the providing special measures for the SMEs because they are backbone of the economy in many countries. Their survival is so crucial for jobs as well, and also very crucial for economic and social cohesion. So the priority must actually helping them to preserve their job until the upturn comes. And I think they need a very strong government support. So that's something we have to consider more carefully. I think this is something we can discuss today. So that's my final slide. There is in doing so, we need a bit of some consideration of the several factors. One is the scale of intervention. The previous financial crisis, the government acted together quickly, but in some cases, it was a bit of piecemeal approaches. We introduced one policy after another rather slowly. That actually somehow contributes, actually the recovery process was a bit difficult and slow. I don't think this time we need that. And so what we need is a larger coordinated intervention with a large scale. And also, it's very important to focus on employment, keep focus on employment to avoid the risk of the human capital erosion and also the risk of the suppressing consumption. And that's actually, the investment. Let's remember that the employment and jobs are a source of productivity capacity through skills and experience, as well as source of labor income and consumption. I think this is one of the very important lessons we get actually from the previous crisis, especially global finance crisis. And this crisis is also very unique in a sense. I mean, it affects both supply side and production and demand at the same time. So I think we need actions which affect both sides of the labor market. And so now, for example, the government assembles their fiscal stimulus. Probably we need a bit of balance between the financial support enterprises and also the immediate support for workers. Probably one way we can think of that is actually we can encourage governments to provide the business, especially those who have very strong actually employment support measures. I mean, we could consider many other creative measures as well. But what my point is that we have to combine ways of the supporting business at the same time helping workers maintain their jobs. So that will be a very important point we can consider. And of course, many of the measures I just mentioned are short-term measures. This should be followed by mid-term and long-term measures. This is all about the boosting investment. And so here we have a number of excellent candidates for the potential the future investment, for instance, health and care and green and digital economy. All of these are recognized in the ILO Centennial Declaration, as you know. And I have to emphasize as a way of a conclusion that the importance of the constructive and persistent social dialogue is so essential, and both at the enterprise level, at the sectoral and national level. And if we will want to see our policy responses is very effective, we know they should be built upon trust, and this trust requires consultation and collaboration. Thank you very much.
Thank you, Sangheon. I think it has been a very
Hi, Roberto. You were on mute, but now you're unmuted, so you can.
Oh, sorry. Sorry about that. No, I was just thanking Sangheon for this comprehensive presentation. I think that, and also for sticking to the time. I think that you have already given us some important hints on how to move, and also based on previous experience, and also based also on the specific elements of this the crisis that is coming. I would like just to optimize the time to give the floor now to Stefano. I have said before that the OECD is already gathering an important package of measures that countries have taken, and which can be very useful also to all of us, but also the expertise that you have developed in terms of measures, in employment measures especially, which have been working in the last years when we had financial crisis, that could also help us to move forward and to see how can we adapt them to the current scenario. Thank you, Stefano, for taking the floor and for joining us.
Thank you very much, Roberto. I don't know whether you can give me access to, yes. Let me see if I can get my presentation. This is not the one. Okay. So I hope you can see the presentation. Well, thank you very much for inviting me. It's a great pleasure to participate to this meeting. These are really unprecedented times. And I think it's perhaps even more than ever important to share experiences and also the different work that individual companies, all the stakeholders, but also international organizations are doing. We are really sort of venturing into somewhat what I would consider to be unprecedented situation times, but also uncharted territory, because this, of course, is foremost a public health emergency, a pandemic. But of course, is also a supply shock, and now is becoming, of course, also a demand shock. And I think it is reassuring that some of the message we have heard from leaders of many countries saying that this needs unprecedented responses. Let me maybe start with a few numbers from the pandemic itself, because I think these are useful in order to frame our conversation. These are dreadful numbers, and I think we are all unfortunately familiar with them. The latest I have from the Johns Hopkins Coronavirus Resource Center suggests 435,000 people were contracted the virus cumulative, and unfortunately we have more than 19,000 deaths, 19,625. One characteristic of the COVID-19 is also that the reproduction number, so how many people one infected person will infect, is actually pretty high. It ranges between 2 and 2.6, sometimes reaching almost 4. Just to give you a sense, the influenza, the seasonal influenza, has about 1.3, and long incubation. And this factor basically suggests that we could eventually reach what the immunologists call the herd immunity. So basically, when the virus could be eradicated only when 50 to 60% of the population would have acquired immunity. So we are not there, we are far from there. And with a fatality rate in between 1 and 3%, actually there are large variation, you can see that the most important thing that all countries affected have to do is to flatten the curve, the peak, if you like, of how many people at the same time are contracting the virus, because otherwise there is a huge risk that the health system will be overwhelmed, and therefore we might experience actually more death. This chart again is also familiar, I guess, with most of you, shows you the evolution, which is definitely an exponential evolution. You can see that it's very similar across countries. Outside China, Korea and Japan, basically Italy is leading, maybe 1 week or 2 weeks ahead of countries like France, Germany and other European countries, and then maybe 2 weeks ahead of a country like the US and the United Kingdom. So maybe Italy to some extent is showing the way in which the virus will spread, which of course is very scary, because you see the very significant increase in Italy. The last information from Italy suggests maybe that there is a reduction in the number of new cases in the past few days. Of course, in the absence of a vaccine, and I cannot move. Can you move the slide? Because I cannot move them anymore.
Is Maria?
Okay, here you are. So of course, in the absence of a vaccine, prophylaxis and vaccination programs are not possible. And that's why I think the very significant measure of containment and mitigation are essential. You all know, and here they are listed, these range from social distancing, enhance hygiene, respiratory protection, close public places, close down most of the actually production activities, cancel public event, and disinfect systematically all public places. Of course, these draconian measures which have been introduced in a growing number of countries have a huge impact on the ability of the economy to continue to function, on production activities, on individuals, workers, families, and in particular, among them, of course, the most disadvantaged, as Sangheon was mentioning himself. Some of the statistics that we are presenting, I cannot move the slide. Can you move to the next, please? So this shows you just the impact, the huge economic impact that this had already. These are the Purchasing Managers Index that you're all familiar with, that is derived from the monthly service of private sector companies. You see that the provisional numbers we have suggest a huge decline that we have seen in the past few weeks. If you like, the drop we observe now, if we were to go backward in time, is much, much larger than the one that was observed in 2009, February 2009. The service sector in particular is hugely affected, consumer-facing industries, travel, tourism, and restaurant. If you move to the next slide. This is just to give you a sense of the significant drop in travel. This is a percentage change on flight departure from the major airport. We're talking about 86% in Italy, 74% in Korea, over 60% in Germany, and 55% in France. And of course, these numbers are updated because more countries are actually moving into travel banning and actually to lockdown. If you can move to the next slide, please. So as I said before, this is unprecedented. The financial crisis was a demand shock. Here we actually combine a major public health crisis, which basically means that first and foremost, we have to save life and reduce the peak of the spread of the virus to avoid that the hospital actually get overwhelmed. Is of course immediately becoming a supply shock since we have interrupted supply chain. The labor supply shock because many workers have to stay home, either because they are in quarantine, are sick, or because of the lockdown. And then there is a demand shock because, of course, many companies have to interrupt or scale down operation. There is, of course, a growing uncertainty that may lead many consumers to cut down on consumption. And this, of course, is also creating further pressures on companies, and in particular on some categories of workers, those in precarious job, independent workers. So can move to the next slide, please. At OECD, I think, as Roberto was saying, we have just issued a policy brief in which we try to take stock of the measures that different countries have taken in different areas, in particular also on the labor market social policy areas. And here on the labor market social policy, I think there are three major building blocks of intervention which we have seen, which again, in terms of scale and scope, I think are unprecedented, even beyond what happened in the global financial crisis. Of course, first and foremost is to reduce worker exposure to the virus in the workplace by allowing easier access to telework and higher rate of health and safety standards. Second, ensuring access to income support for sick and quarantine workers by strengthening and extending sick pay regulation, notably for what we call non-standard workers, all of those who are not normally covered by sick leave provisions. Third, helping working parents who are facing unforeseen needs as the schools are closed. And again, in particular, among them, of course, the health workforce, health workers who have to continue to perform their duties and their activities. I think very promising also from the lessons we have learned on the financial crisis, the use of short-time working schemes. And of course, it is also very important to provide income support to workers who do not have access to the traditional safety net, unemployment benefit, or other form of income support. And last but certainly not least, help firms, in particular the SMEs, as also Sangheon was saying, to basically cope with this huge drop in demand and the decline in their own available workforce. So if you move to the next slide, please. So this just to give you a sense of the number of OECD countries that have introduced a different type of measure I was referring to. Just a few numbers: 86% of countries are providing financial support to companies, 80% have strengthened or extended the income support to workers losing their job or income, 2/3 have introduced or extended different forms of short-time working schemes, 60% have strengthened or extended sick pay and introduced measures to reducing the worker exposures to COVID-19. 50% of countries have taken measures to address unforeseen care needs for working parents, and so on and so forth. Again, in terms of a number of measures, but most importantly, of course, in terms of depth and coverage of these measures, these I think are unprecedented. I think we have learned quite a lot from the financial crisis, and I think this has proved to be quite useful now in terms of the timing of the intervention, but also the scope and the coverage of this. What we don't know yet is the ability of these measures, some of these measures, to reach out to the most vulnerable groups, individual workers, households. And the simplest the measure put in place, the easier it is that they might reach out to those who need it the most. If you can move to the next slide, please. I will go very quickly on this because some of these are well known to many of you. But just to tell you that when we look at the short-time working schemes, I think many countries have learned the lessons from the financial crisis. These short-time working schemes exist in about 24 of the OECD countries. If they are, well, timely and targeted, they can actually play a major role. The interesting thing I want to point is that in a number of countries, the access to short-time working schemes has been made easier. Second, the generosity of the system in terms of the transfer, the public transfer, has been increased in a number of countries. And I think these are all very important measures in order to enhance, increase basically the reach of these type of measures. A number of countries actually try to see whether training programs. You can move to the next one. Can you move to the next slide? Thank you. This one is about the financial support to firms affected by the crisis. This has taken different forms: deferral of tax and social security contribution payments in a number of countries. In Denmark, for example, postponed VAT and tax payment. In the UK, abolished taxes on small retail or hospitality businesses. In Germany, to grant tax deferrals and waive the enforcement measure to late payment penalties. There are also a number of countries that have introduced public grants and emergency credit in countries like the UK, in Italy, and Germany. So there's a lot that actually resources which are transferred onto companies, and among them in particular to the small and medium-sized enterprise, those who are most affected by the shock, but also those who have weaker instrument to basically respond to that. If you can move to the next slide, please. Of course, I think this crisis is also testing basically the ability for many workers to work, to telework. I think we are ourselves, I think, experimenting how far can we go in using telework in a way to maintain activities while not being able to be in the workplace. I think there have been attempts to help companies to put in place the infrastructure which is needed to basically allow the workers from working from home. In particular, again, the focus is largely on the SMEs, which is both financial and also non-financial in terms of supporting the acquisition of the equipment and so on and so forth. It's very, very important also to enhance the health and safety of those workers that for different reasons still continue to work. And this is, again, there is a number of resources which are made available through the companies by the public authorities. If you can move to the next slide. The other big areas, of course, supporting families, especially those with caring responsibilities. The large-scale closure of childcare facilities, of course, create significant difficulties and hurdles for the working parents, who on the one hand have to telework, and on the other hand have to take care of their children. And here again, there is a number of countries that have introduced pretty bold measures, including resources and financial resources to give parents access to childcare support and so on, as well as a significant financial support for alternative care arrangement. Country like Italy, where the working parents have the possibility to take 15 days of leave, or in Portugal, where parents whose children are affected by school closure receive a benefit of 2/3 of the monthly baseline salaries. I just mentioned this as a very quick overview of the many measures that countries have taken in place. But I think let me just conclude by showing, if you just go to the last slide, on the last two policy briefs that the OECD has produced. The second one is the one I was referring to, supporting people and companies to deal with the COVID-19 virus. I think what we are working on is also what could be the exit strategy from the major containment and mitigation policy, actually the lockdown in many countries, which measure can be basically lifted earlier, and how can we resume economic activity in a way that actually will help our economies actually to regain momentum. Of course, one big question will remain to be addressed is whether we can really sort of consider this as an episode, or whether in the fall and winter the virus itself will actually resurface, which may mean that we might have to go back into containment and mitigation policies. This makes any projection in the short-term projections extremely difficult. With that, I conclude. I thank you for your attention, and the floor is back to you.
Stefano, thank you so much. I think it has been, again, very comprehensive. We are asking you miracles. I mean, just to put all in 10 minutes, 12 minutes, and that's very difficult. I think that the quality of the information that you have provided us is really high, really high. And what you said now, what you are doing is trying to identify what are the measures that in the immediate term could help better also to what will be the best strategy to immediately gain momentum. And that's a qualitative analysis that we all need to make. So I want to now give the floor to Thomas. Thomas, the floor is yours. Thank you again for joining us.
Thank you, Roberto. Can I share my screen with the slides?
Yes, we are on it.
Okay. Are you moving the slides for me, or can I move them from my screen? There are lots of animations. So
just tell every time that you want, Marina will move the slide. I think that would be
if not, I can make you presenter if you prefer.
That would be better, because I have to click a lot of animations through the document.
Okay, 1 second, please.
If I may just say, the sound is not very clear. Maybe you can move closer to the micro, Thomas. Thank you.
Sure.
Yes, I agree with my colleagues about the microphone.
Okay. Can you see my slides?
Yes, we can.
Okay, can you hear me well?
Yes, we can hear you.
Okay, thank you very much for this invitation, Roberto. I also want to present in 10 to 12 minutes work we have done at the German Economic Institute, which is based in Cologne, Germany. And this is in co-authorship with Matthias Diermeier, who's also joining the conference. My presentation will focus on 3 aspects. First of all, what kind of crisis are we dealing with? Secondly, what are the different proposals worldwide? We have analyzed some case studies. And then thirdly and foremost, we will give our assessment on these different measures proposed. We have focused in our analysis on the developments in the stock markets. Here you can see stock markets worldwide. We have set the date 31st of January to 100 and looked at the development. As you can see in the German stock market, here represented by the DAX, you see a dramatic decrease over the last month and a somewhat stabilizing trend more recently, which we assign to the measurements taken by the ECB, which I will talk about later on. We see a similar development here in the Dow Jones, also a dramatic fall in the stock market with a more stabilizing trend recently. And of course, we have to look further whether this is an upward trend coming along. The same is true for the Nikkei in Japan. We can also look at the Nasdaq in the United States. And then we see a run on safe assets here given by gold. And we can see most dramatically a fall in the oil price by more than 60%. So what are the predictions being undertaken right now? We must say at the German Economic Institute, we are not doing any forecasts at the moment because of several reasons. I will come to this. but the other German research institutes have looked at the forecast for real GDP growth in 2020. And we see here at the DIW, they have a very mild decline in GDP growth of only 0.1%. We see that the RWI has a forecasted a decline of 0.8%, and this trend continues going along. So we have a strong range, we have a wide range between minus 0.1% and minus 4.5%. And if you look at the recent study undertaken by the IFO Institute in Munich, they have estimated that the GDP's annual growth rate could shrink even between 5 to 20 percentage points. So I think what I would like to emphasize, first of all, in all these forecasts, they have to be taken with caution. There's a lot of uncertainty surrounding this. We see at least one or two factors that are important for the robustness of these forecasts. The first factor is how long the shutdown or lockdown will continue. In a literal sense, every month counts. So every month that these production plants are closed will have a dramatic impact on GDP. For instance, in Germany, Volkswagen has just decided to close their production plants for 2 weeks. And it remains to be seen whether they can open again in 2 weeks' time. What crisis are we dealing with? As was already emphasized by the other speakers, it's a supply and demand side recession. We want to emphasize that this exogenous shock has originated in the real global economy and not in the financial markets, as was the case during the financial crisis. On the supply side, we have already heard the global supply chains are interrupted. In Germany, we still expect the peak of this to be happening in April, when we see the lagged effects of the loss of production in China. We have a consequent reduction in employment and also income. And thirdly, we have seen a shutdown of production plants and also of offices. We just had a meeting in the morning with different sectors in Germany, the automotive industry, the chemical industry, and these worries have been confirmed that they have already seen a significant reduction of production numbers. On the other hand, as was emphasized, we have a demand side shock. We have seen a breakdown of global demand, firstly driven by the outbreak of the coronavirus in China. And then we have seen a psychological effect. So what we would coin a wait and see shock. Investment and consumption demand will be most likely postponed due to increasing uncertainty. And then also we have seen a breakdown in tourism. We have seen the numbers on the flight departures, but also due to the self-inflicted shutdown of many institutions such as theaters, restaurants, and so on, we have also seen a reduction in social and cultural consumption. And this has all come very suddenly and very abruptly. On the other hand, we need to take into account that in certain sectors, of course, in the medical sector, but also foods and beverages, for instance, we have seen an increased temporary demand, and this will be very interesting for the analysis in the aftermath. So how do we exit this crisis? So for specific goods, we have also seen at least a temporary surge in demand. What are the responses worldwide? The Fed has decided substantially to cut the interest rate by 100 basis points down to 0 to 0.25%. They have already initiated a quantitative easing program without mentioning specific numbers. The ECB has already initiated two amounts. One was 750 billion, 19th of March. And then before that, on the 12th of March, they've already initiated 120 billion. They call this the Pandemic Emergency Purchase Program. And this will last until at least the end of 2020. The Bank of Japan has also promised to do more quantitative easing. They have set aside 16.6 billion euros for additional purchases, and the interest rate remains here in the negative terrain. And the Bank of England has also cut its interest rate to 0.1%, and they propose quantitative easing of 200 billion pounds bonds, 200 billion pounds that are in bonds. So I think there are two trends. One is that all the main or big central banks worldwide have now reached the zero lower bound, which was a trend that has happened before the outbreak of the corona crisis. But now also the Fed and the Bank of England have reached that zero lower bound. And secondly, that there is a strong will to go ahead with more quantitative easing. What are the responses on the fiscal policy side? In the US, I must mention this information can change by the hour as we see in these recent days, so these numbers should be viewed with caution. But at least last night they agreed on almost 2 trillion fiscal stimulus package, which is interesting for us is this first policy, $1,200 in cash transfers to many Americans. As far as we understand it, this should be means tested. Then they have a program for small companies, another one for industry cities. They propose a state and local stimulus fund, and they also want to support hospitals. The specifics of these arrangements are still discussed. In Hong Kong, as far as we understand, they have passed this initiative of giving 1,200 euros per person, so a cash transfer financed by the state budget to each person. This is not means tested, so they distribute this equally to each person. We must say that Hong Kong is in a different phase of this crisis. So as far as we understand it, they view this measurement as a demand stimulus. In Germany, we have seen one of the highest debt packages being agreed on. This is 156 billion of new debt that is initiated. And there are 5 different policies. We have already referred to the tax deferral policy, liquidity support for small companies. Also, there are supposed to be direct subsidies for companies and a simplified access to social security systems to help with income support. In the UK, they are discussing also direct subsidies for companies, especially in those sectors that are most affected. So for instance, in the retail, restaurant and tourism industry. And this package is 21 billion euros. In addition to these fiscal policy measures, there are substantial credit lines, so giving guarantees for credit lines, for instance, 330 billion pounds in the UK or 400 billion euros in Germany. And also the European Commission has just posted a statement that they will activate the general escape clause of the EU fiscal framework, so governments can exceed the 3% government budget deficit, and they can also have higher debt to GDP ratios, so higher than 60%. This should create the legal framework for giving flexibility to each national government to go ahead with their fiscal stimulus packages. What we discussed in this report is one idea that was floated through the media, especially in Germany, but also I think in the United States, is this idea of helicopter money. So what we discussed in our short report, okay, is helicopter money one viable alternative? It goes back to Milton Friedman's idea to drop $1,000 from the sky to each person. He emphasized it should be a unique event to stimulate demand and increase inflation. And it should be financed by the central bank. So it should not be a fiscal stimulus financed through the budget, but the central bank pays for it. More recently, famous economist Jordi Galí had this press statement, money financed fiscal stimulus is needed now. So he would agree with the idea of helicopter money. What is important in the assessment, he's not talking about helicopter money in its original idea from Milton Friedman, but he is actually proposing liquidity measures for companies, for firms. And the merit of this idea is that when you give credits to firms, you would avoid raising taxes or increasing debt levels in the future. And I think this is very important to emphasize, because if you now give more debt to companies and you have a higher burden on more small or medium-sized companies, when you come out of the crisis, this might have negative effects on their ability to continue business. The negative effects of helicopter money are also mentioned. It could lead to a temporary inflation bias. We are not very worried at this moment about this. Inflation rate is at 1.4% in the Eurozone, so there is room for maneuver. But also there might be adaptive behavior given the economic agents adapt to this policy, and that might undermine the effectiveness of this idea. He also emphasized and stressed helicopter money is only an emergency tool, so when all else fails, it could be introduced. In our view at the German Economic Institute, and that is our take on it, it's a more radical option. We think there are at the moment other monetary and fiscal tools which we have seen in the slides before, such as the quantitative easing program of the ECB, but also the fiscal measures that are now being taken. which should be utilized first and also should be assessed in a certain period of time, whether they have been proven effective or not. What we merit of this helicopter money idea is to give liquidity to firms in terms of unrepayable debt. So they could have some merits because it would not overburden companies in the aftermath of the crisis. And we must say all the fiscal measures we have seen so far, whether it's in Hong Kong or in the United States, they are not helicopter money. They are not financed by the central bank. They rather represent cash transfers from the government. Okay, what policies seem promising? What do we conclude from this? We think that any policy that is now being undertaken, and was mentioned before, it shouldn't be a piecemeal, it should be comprehensive, it has to be resolute and ambitious in its target. And I cannot stress enough this point, it has to be coordinated, and this is on the national level, or this is true for the national level as well as on the European level. What we try to avoid with these policies, I think that should be a very important goal, is to avoid permanent economic damage. There will be companies that go bankrupt, there will be businesses that cannot be saved, but at least healthy companies, healthy businesses, they should not suffer from this crisis, and there shouldn't be any permanent economic damage. For us, it is important the debt sustainability in the medium term, even though an idea such as helicopter money could avoid higher taxes or higher debt levels in the future, nonetheless, these debt levels will exist. So one has to also look at the sustainability in the aftermath, even though right now we agree that it should be more than less and it should be comprehensive. All these policies, for us, there should be at least 3 criteria that need to be taken into account: whether this policy is timely, so what is the right timing of this policy, whether it is really temporary or there will be a more sustainable shift in policy, and whether it's actually targeted. And that is also our criticism on ideas such as helicopter money, or what has now been introduced in Hong Kong, giving $1,200 or euros per person. It is not targeted enough, and you might end up saving people that do not need to be saved, or households that do not need to be saved in the current situation. What is also important is this restoring confidence argument. We need to stabilize expectations, and we have seen that slightly in the stock markets. When the ECB decided to intervene, we could see a stabilization of expectations. As I said before, insolvencies might be unavoidable, but healthy businesses should be saved. We think that a demand stimulus in this current situation would not work. The crisis started in the real economy, it didn't start in the banking sector. So hence, a demand stimulus might be needed at a later stage, but the timing for this is not right now. The big question is, how do we actually deal with the trade-off between health management, so containing the outbreak of the virus, versus the economic damage? As I said before, in all these forecasts, they will strongly increase these negative numbers the longer the shutdown prevails. And we think the starting point for any proposal is that what is the crisis we are dealing with? In our view, it's a managed and combined supply side and demand side recession. And helicopter money might be temporary because it's a one-time event, but the question is it timely? We think it's not timely. It could come at a later stage if needed, if everything else failed. And we also criticize that it's not targeted enough. To conclude, this is my last slide. What are the open issues we are still thinking about and we would like to do, and maybe get your insight on this, how to deal with these issues? One question we are asking is, how will these temporary measures be rolled back in the aftermath? So what is the exit strategy for national governments, but specifically on the European level? So what's the exit strategy of the European Commission? How can we deal with increasing firm indebtedness? As I said, we would propose unrepayable debt measures, so give direct subsidies to small and medium-sized companies, to solo self-employed people right now, and have forgivable debt in order to save their balance sheets from further harm, so creating no permanent damage. And then also we think that the cash transfers, they have to be targeted and they should have the right timing, because at the moment it's not the time for demand stimulus. Governments with high debt to GDP ratios, such as Greece or Italy, they may face a sovereign debt crisis in the aftermath. We support the policy of the ECB to have done this pandemic purchase program, but we have to see what we do in the aftermath of the crisis. Big question is, how do these countries actually roll back productions? What happens when the shutdown is over and we try to stimulate production again, we try to increase production again, while keeping the spread of the virus contained, because we know that infections might increase once these measures are lifted. And we generally have to think about how we can actually effectively deal with supply side shocks, given that we have standard fiscal and monetary tools. Thank you very much.
Thank you, Thomas. I think many of the points that you have raised are going to be very useful for us. Precisely this idea of helicopter money, the pros and cons, and also the big question that you have at the end. I mean, the health, which has to be at the top priority, but to some extent also we see now some drastic consequences of economic measures being taken that we have to assess also in the middle and long term. I don't want to take more time. I want now to give the floor to Renat from an employers organization perspective. How can we act? How can we anticipate? How can we really join forces with the public sector and also with our partners, the trade unions and the workers? The floor is yours. Thank you.
Well, thank you very much, Roberto, and hello to everybody. I would like to say a great thank you to Sangheon, Stefano, and also Thomas, because that was really a very, very valuable and very interesting presentation of the measures that are being taken and the challenges we're facing. What I would like to focus on now is what we do sort of from the employers associations perspective in the practical world in which we live, in the concrete world. In fact, we now see that, well, we all know that the German economy is highly internationalized, and it also has a very high proportion of small and medium-sized companies. And so these companies are faced with all the challenges which were mentioned by the colleagues before me. And we have lots and lots of very practical questions which arrive in the BDA. And so we have set up in the BDA a kind of rapid reaction force via Teams, which is a tool from Microsoft, where we have virtual exchanges with our member federations and with our companies who come in and alert us to problems, and we feed informations and we try to find solutions, or we try to find answers to their questions. And I will give you just a couple of examples. We have well, obviously the value chains which are interrupted now, both upstream with the production architecture, but also downstream with customers and sales. But the main issue, especially SMEs are asking and are confronted with, is related to the mobility of workers. We have the issue of cross-border commuters who cannot pass the borders anymore as easily. Or we have, for instance, a situation regarding the coordination of social security and tax systems for these cross-border commuters. And so we have to intervene with the politicians and the European Union to make sure that this exceptional situation where people are asked to do home office instead of coming to the factory or to their offices on the other side of the border, that this doesn't change all of a sudden their affiliation to social security systems or their tax affiliation. We also have been alerted to huge problems regarding seasonal workers, because as the borders are closed for purposes of reducing the infections curve, the seasonal workers who are now desperately needed for asparagus and strawberries and everything in the agricultural sector, they can't come over from their countries of origin. And we also find that many of the posted workers, for instance, they now go back to their home countries because they just see with this pandemic spreading, they prefer to be at home with their families and in their home country rather than in the country where they have been earning their money so far. So there are certain sectors like the construction sector, the agriculture sector, the tourism sector, and all the transfrontier regions which are heavily affected by the measures, and where lots of very practical questions arise which have never been tackled before, because we were used to the single market, even to the Schengen arrangements, which mean there were no border controls in general, and so people could move freely, and they forgot about the fact that these are borders. And this leads me to a sort of general reflection, which is what actually Thomas mentioned at the end of his presentation, that we seem to be faced, we are faced with a dilemma between the healthcare response and the economic response. Because as our governments try to flatten the curve of infections, which is what Stefano rightly said, really imperative to make sure that the healthcare systems can cope with the pandemic, measures are required to do this, which actually make the economic impacts much, much deeper. So this is a real dilemma, and I think the policy responses, the short-term policy responses, must try to address this dilemma and must try to make sure that the short-term measures, which really interrupt in a very very radical way both the value chains, the worker mobility and everything due to the lockdowns and the restrictions on mobility across the frontiers, that these effects have as little repercussion as possible on the economic development. So we somehow flatten the curve of the economic supply and demand shocks. What we see, what is really welcome, it has been mentioned, is that, of course, SMEs need to be helped so that they don't go into insolvency. So they need to safeguard their liquidity. As Thomas said, we have instruments like tax deferrals, grants, but also credits. On the worker side, where we have the short-time work, and these rules have been quite substantially sort of stepped up at this crisis, even more so than in the 2008 crisis, because we noticed that a very good short-time work response and support for companies and workers makes sure that the unemployment rate is mitigated, the increase in unemployment is mitigated, but it also makes sure for the companies and the SMEs in particular that the employees stay on board. They don't have to dismiss them. And so when the economy resumes, they have the workers all there ready. They don't have to go to the labor market and look for new employees. And this is something very, very important, but of course it has to be limited in time. Another important issue which a policy field refers, of course, to the individuals, be it the low-wage workers and the self-employed. You take, for instance, artists, because there are no more concerts, all their contracts have been cancelled. So here we have seen that it is very welcome to facilitate access to social assistance. For instance, the means testing, which has been rather strict in the German social assistance system, has been relaxed, but also in an attempt to avoid homelessness, quite a radical measure has been decided by the government, which is to prohibit termination of leases for apartments when people cannot pay their rent due to this crisis. Now, of course, this has to be looked at in a very applied very cautiously and limited to this crisis, but I think it's very important and an important element to simply reduce the adverse social effects and to make sure that this deep cut in the economic performance is somehow well cushioned socially. Finally, to conclude, I would like to just make a reflection on the geographical dynamic. we see that China, which was the first country to have to fight with the outbreak of this pandemic, has taken very drastic measures very early. They locked down everything in Wuhan and the Hubei province. And this was, of course, looked at by the rest of the world with some astonishment and maybe also some negative comments, some criticisms. But in fact, what I am told now by the large companies who are, for instance, the car manufacturers who are also producing in China, they tell me that now the economy is really resuming and going back to nearly normal in China. So the drastic measures have led to a very strong economic impact, but it was short. And the situation the German big car manufacturers are faced with today is that now in China, everything is resuming. Demand is resuming, production could resume, but their value chains to the Western hemisphere of this globe are now in danger or interrupted because they are now closing down their production in Europe and in the United States and in South America, Latin America. So I think this illustrates the dilemma which we are facing with the fight of the infection and the economic impacts. And if I might say, my very personal assessment is that probably in Europe we have done too little too late, and now we are facing with a crisis which is much bigger and much more difficult to confront, and which probably will take longer and provoke a deeper recession than had we sort of taken more drastic measures more earlier. It probably also shows that the infrastructure, the preparedness for pandemics and emergency situations is not good enough in many of our countries, because these infrastructure have been neglected and downsized in the last 20 years. And there are some reflections to make on this, because obviously in a very integrated world economy, any pandemic or any health issue will spread very quickly, and this is the lesson we should draw for the future. I've been very impressed by an interview the former health minister Roselyne Bachelot gave some days ago in France, where she said when she was faced with a flu pandemic and she bought lots of masks to just have them as a infrastructure, she was heavily criticized, and now she says now there are not enough masks, there's not enough health and safety equipment even for doctors and medical staff, and that shouldn't be really the case. Finally, what we need to look at is also at the European level, and here I'm particularly addressing my colleague Jose Maria Lacasa, who is present as well. He's the chair of our Social Affairs Committee in Business Europe. I think we should look at all possible measures to make sure that additional restrictions on companies are not put into effect right now. And this refers particularly to the transposition of the revised Posting of Workers Directive, which would lead to huge bureaucratic problems for companies. And here we need to make a joint effort to tell the European institutions, the Commission, but also European Parliament and the European Council, that this is not the moment to pursue these initiatives, but we should really focus on getting the economy going and limiting the adverse effects as much as possible after we have been able to contain the medical crisis. So to close, colleagues, I think what we can say is there are no globally valid policy advice to be given, but what is really important is that we have exchanges like these ones, and then we can all look at our own situation in our own countries and see what are the best tools to address this and to make sure this dilemma between flattening the curve of infections and flattening the curve of economic crisis is solved in the best possible way. Thank you very much.
Thank you so much, Renate. I think that you have raised many useful points and many pertinent points. And the last one related to how you resume work and also how the global dimension of this trend, even though there are no global solutions, is important. And that's why we have also Jose Manuel Salazar, who is looking at the end of Latin America, where the virus is now spreading, but perhaps they can take measures that are drastic right now, even though the situation is completely different because of the huge informality sector and there's already some questions being raised by some of the participants. I encourage the participants to raise the questions by written. That will help us also to optimize our time at the end. Jose Manuel, thank you, and it's very nice to see you again with us.
Likewise, absolutely. Thank you very much for inviting me and to contribute to this very important conversation. Well, a lot of things have been said and very well said. I think I have perhaps a few, perspectives which are a bit, complementary or different. I would like to start with the current situation briefly. Perhaps let's look at the next slide. I don't have the control here of the slides. Then look at the health measures and the economic impacts, and indeed go over a little bit of this dilemma that Renate was talking about. And then also look at some differences between 2008 and now. Now, if we look at the current situation, this slide there, Stefano gave some figures which I think are similar, in fact, higher. Probably he checked later about the figures. This is changing by the hours, but we have nearly more than 400,000 people with contagion in 195 countries yesterday, and more than 18 or even 19,000 people dead. And this continues to grow. We are in a very delicate moment because this is the acceleration phase of the contagion, and we know how it works. So it's very important. In terms of what actually Renate called the geographical dynamics, from having the epicenter in China, the virus moved to Italy and all of Europe, which is now kind of the epicenter of the action, but is rapidly moving, of course, as well in the United States, where the contagion is becoming rapidly also exponential. The spread of the virus to Latin America and to Africa it has a few weeks of delay. And this is good because it gives some time that should be used wisely. And there's much discussion. I think this is why this webinar is so important as to the responses in developed countries, but also there are some specificities in developing countries that is important to discuss. Let's look at the next slide. The flattening of the curve of contagion has been mentioned already. This is very important, not to overwhelm the healthcare systems of the countries. And you can see there, I think this graph has been probably known by all of you, the big difference that it makes to have a good package of prevention measures, not to reach a peak that saturates the healthcare system, which would make everything absolutely worse. The next one. Now, this package of measures, the health package, as we all know, includes social distancing measures, closing schools, universities, high schools, postponing or canceling all type of events, closing borders in many cases, massive testing and tracking of contagion. It makes an enormous difference to contagion, but it also restricts human activity and is a huge economic shock. Never before in the world has so much of the population been told to stop working, to stop traveling, and stop spending. So it is fabricating a sudden stop in economic activity, a near shutdown of economies, and of course is going to produce recession and unemployment. And this is the trade-off and the dilemma that Renate was talking about, which is a very real one, which is to what extent the health measures, how strong, how draconian they need to be. Of course, saving lives is priority number 1, 2, 3, and 5. But at some point, there are questions also about the length to keep these measures. Next one, please. Now, in terms of the dynamics of the impacts and the type of shock that this is, the initial impacts of the health measures package is particularly, a supply shock, which then operates through, feedback and so on in terms of demand shocks as well. So there's a reduction in sales, there are supply chain disruptions, layoffs, cash flow problems, and bankruptcies, sectorial impacts like in airlines and tourism, Some occupations like domestic workers, for instance, have information from all Latin America and my own country here. Everybody's saying to domestic workers, thank you very much, don't come, go home. In many cases, they are not continuing to be paid, which is essential that they continue to be paid. But for instance, that's a good example. And there are thousands and thousands of very vulnerable workers in many cases. And then there are second order effects, non-performing loans in the banking system, fiscal deficit, international debt levels. So these second order effects could feed back into the real economy and make things worse. And this is why it's so important to address these second order effects to reduce the damage and to not let the economic damages become structural, that they will come and will make the recovery much more difficult. The next one, please. Okay, so this is the topic of what is different from the 2008-2009. I think this is a very important question because we had, and I was in the middle of all that with many of you, as you remember, all the exercise in 2008-9, the Global Jobs Pact and the negotiations and the package of measures that was discussed and agreed by the ILO, but it was a huge exercise in knowledge sharing, and we did inventories of the response packages by countries. But I think it's important to think a little bit about the differences between the two situations, because I would like to point out to four differences basically. The previous crisis, the financial crisis, was initially a financial crisis that impacted into the real economy. This pandemic is really first and foremost a supply shock that affects the real economy, production, supply chains, etc. And of course, through feedback loops and so on, it also immediately affects demand. So it's a supply shock and a demand shock simultaneously. The second difference is that the 2008 and 9 crisis was a crisis, as some call it, of the North Atlantic. Started in the United States, it was contagion to Europe, but it didn't affect China that much. In fact, China was growing at very high rates. And thanks to Asian dynamism and Chinese dynamism, it was even called the positive China effect. Latin America and Africa had a strong demand and exports, particularly those countries that had commodities. That was the Chinese machinery.
So I think we have a problem with the connection of Jose Manuel Salazar.
Was demanding a lot of commodities. Global, there are no exceptions, and in a way, in contrast, this is what Renato, there are really good news in terms of that things are going back to normal in China. Well, that would be excellent. The third difference is that this time the impacts and disruptions on international flows of goods, services, and people are much higher than in 2009. And this is in a way a massive process of deglobalization, at least in the short term. And the fourth difference is that in 2008 and 9, there was a lot of international coordination and collaboration. But that doesn't seem to be the case this time. The G7 and the G20 are relatively passive. I understand there's a meeting tomorrow. And then multilateral agencies have mobilized some resources, the IMF and the World Bank, which is very, very important. So I think there's an important discussion here about how to increase international cooperation and whether the funds that the IMF and the World Bank and others are putting are going to be enough. So the conclusion of all this is that while there are many lessons from the previous crisis that are relevant today, I think there is a room to improve, if you like, or to innovate. So the next one, please. Could we have the next slide? Yes. So in terms of this would be my last point. I think a lot has been said about the policy responses, but let's begin with some, well, first just looking at the range of issues. Of course, all the tools are important, monetary policy tools, fiscal policy, and probably fiscal is much more important this time, and monetary policy being, playing a complementary role. Employment support measures for enterprises and workers, enterprise-specific support, worker-specific support, And something which is very important in developing countries, because all the measures, monetary, fiscal, enterprise-specific support, worker-specific support, normally are predicated on the formal sector. These are for formal sector employees. Whereas in many countries in Latin America and Africa, of course, the size of the informal sector is very large. So a big part of the response has to be social policies and social transfers. And it's important to have that in mind. The next one, please. There is a point here in the next one about the heterogeneous impacts. In a way, this is obvious, but it's important to think that many countries, depending on their structure, depending on the export portfolio, whether they are commodity exporters, oil exporters, or oil importers, there's going to be a very different type of impacts in different countries. There is a huge collapse, even a reduction in commodity prices at the moment. So commodity exporters are going to be very badly hit, importers, but exporters of oil, for instance, have a relative benefit. There's a collapse in tourism, and some countries are very highly reliant on the tourism. My country, Costa Rica, is one. Hotels are closed, restaurants are closed. The airport is practically, there's a prohibition by the government. So the tourism industry is shut down at the moment. We will see for how long. Countries that depend on remittances strongly, like El Salvador, like Mexico, and so on, which is very, very important. There are reasons to believe that remittance flow would also be hit. And then there is an issue also of to what extent countries are going to be able to continue to access capital markets. So that's just some issues to have in mind. And the other issue is what I said at the beginning, that Latin America and Africa are lucky in inverted commas, to be a few weeks behind Europe and Asia in the spread of the virus. And this is a time that should not be wasted. It's a time that has to be used very wisely to anticipate the impacts, to prepare for the responses. Part of the preparation is the medical response, and of course, part of the preparation is the economic and social response. Unfortunately, some governments in Latin America are in denial and postponing the preparations. I don't want to name them, but they are in the news how different countries are reacting, and one can not save words in saying that this is criminal and this is going to have a huge cost and a huge problem also with the neighbors. So I leave it there because I think there is an important role for all of you as private sector to also impress upon governments that this is serious, that maybe in Latin America, in some African countries, it hasn't hit yet, but it's going to hit, and one has to be prepared. Some key issues that I would like to emphasize is that the fiscal policy response is essential. But what to do in countries that have very small room of maneuver or very small fiscal space? I think these are countries that probably should begin talking already with the World Bank, with the IMF, and thinking about strategies, to what extent they can increase their external debt and so on, because this is going to be expensive. And if you don't spend the money, you are not really responding in the way that is necessary. The other question is for how long to sustain the social distancing and lockdown. This is Renate's question, the dilemma there. How can the cost of the lockdown be lowered, and what is the exit strategy? It has already been mentioned also by Stefano. And there is a very important social justice issue, very important issues here about how to share the cost of all this and have benefits, but also costs distributed in society. And this is why social dialogue and negotiations, which are very difficult, of course, in this situation, but are important, particularly in countries that have not been totally hit yet. And I think I will go towards the end relatively quickly because there is a list of measures. These are measures really from...
Jose Manuel, if you can sum up quickly, we would thank you because we are running out of time. Thank you so much.
Yes, okay. So I won't go through these measures, just to say that I'm participating in a network of economists that is looking at the responses in Latin America now. And this list and the presentations will be there for you are some of the main measures that seem to be emerging in Latin America. Some of them correspond to the Global Jobs Pact. So the next one, please. I want to finish with these are support measures for workers, and I think they have been very, very well reviewed. Next one, please. For households, as I said, social transfers and for the informal economy is crucial. Next one, because I want to finish with this point. Fiscal policy is a very powerful instrument. All of the measures before in support of the private sector and households and so on really are fiscal measures, which are going to impact fiscal deficits very strongly. Next one. So the main measures are a repeat really of, because most of the measures are either on the tax side or on the expenditure side. So this is, I would say, the main issue, and it's very important for the private sector to engage with governments to see how the fiscal package is going to be established and how it's going to be financed. And my last point and last slide here, the next one, please, is this. What are the restrictions and risks? There are huge risks. The increase in fiscal deficits, both on the expenditure side and on the tax revenue side, the increase in debt levels. Countries with high debt levels could trigger, could have downgrades and by rating agencies and increase the cost of international borrowing. And this is a virtuous circle. So it is important to have this very clear in the short term to see what happens the day after. Higher interest rates because of pressures of government bonds and borrowing and so on the financial system. The international financial markets might be actually shut down for many countries, and this is a major issue as well. And what to do in fiscally restricted countries, as I said, in developing countries, this is a major issue. Many countries are not ready really this time. Not the case in Latin America. Last time Latin America had a lot of fiscal space. That is not the case this time. So this would be my main messages. And again, thank you very, very much.
So thank you to you. I'm sorry to put some pressure on you because we are running out of time. But it has been highly, highly interesting, especially the part I would say related to the risks, because these risks are rare. And I want to take advantage now to sum up the most important questions, because Raymond is unfortunately not going to join us finally because he had an unforeseen press release precisely on a prediction of economic growth for Spain and other countries based on a survey that they have done in the institute in which he is working. So he apologized, but that gives us some time also for questions, and we'll go as quickly as possible. The main questions, if I can sum up many of the questions that have been made by Jose Luis, by Martin, also by one of our friends in Rwanda, are the following. First of all is, how do you reach the informal economy, especially I would say in Latin America, in Africa? I mean, this liquidity to the economy, well, it can have some risks, but the problem is that it's not going to reach those that need it, not just individuals or workers or people with vulnerabilities, but also small and medium companies. That's one of the questions. How do you reach the informal economy? The second has been to some extent answered or raised by many of you, or some of you, which is the debt problem. What happens with countries that are over debt, that have no fiscal space to put in place these measures, or that can risk also having a kind of spiral or of debt, which will be unhandleable. There is one also very interesting question from Rwanda, which is what happens with those countries which are so much dependent on tourism or travel. I mean, what's the scenario for them? And I would say there is a last point that has been made also informally, is the problem also to boost the demand is that most people are confined. So the way they spend money is different. It's not the same situation that the one that you have when people can move freely. And also, I think Renato referred to the cross-border problem. But here the problem is that people that can spend the money just can't spend this money from their own homes, and they need to have or to find the ways to also to have these incomes in a manner which is efficient also for the economy. So those are the questions. If please any of you or the panelists can answer them, that would be great. I don't know if Sangheon has already left. He already apologized because at 3:30 he has to leave, but he already raised he already answered some of the questions. But if I don't know if Stefano, Renat, or Thomas, you can answer any of them, and of course Jose Manuel.
This is Stefano. Can you hear me?
Perfectly.
Okay, thanks. Well, let me try to address some of these key questions. All of, I think, are extremely important and very difficult to answer. I think on the debt issue, which is a major one, of course, for many of the countries that are hugely affected by the lockdown and the major significant measures which have been put in place, I think I would just refer to some of the statements which have been made at the European level and also at the G20 level, but in particular at the European level, saying that no country can basically withstand the major shock that the COVID crisis is generating by itself. So I think this definitely requires a lot of international cooperation, and of course within Europe also a lot of cooperation across the different countries. Second point about the tourism, and I think this is more a big question mark, of course, is whether or not what happened basically and when some of the major drastic measures that the country in the northern hemisphere are put in place can be lifted. If the experience of China is of any lessons, I think we might hope at least that in the northern hemisphere, some of these very draconian measures could be lifted in the next couple of months. The question is whether or not the virus will spread to the southern hemisphere, as the northern hemisphere will move to more warmer and more humid weather. And that's a big question mark. I mean, we have some cases in Australia, New Zealand, in South Africa. The question is whether or not the virus will actually spread in the southern hemisphere going forward. On the consumption, of course, this is very much related to when and how the restrictions will be lifted. That's a very important point. And maybe the last observation I want to make very quickly is about the discussion that is taking place about the helicopter drop of money, which is indeed something which is under discussion. We discussed also at OECD. The only point I want to make there is that the use of this instrument of last resort might also depend on the specificity of different countries. A number of at least European countries and other OECD countries have a fairly well developed social protection system. So many workers are helped receive income support in one way or another. And perhaps there is less need for a transfer to workers at least, and probably if any transfer is needed, would have to go more to the companies who might be dramatically affected by the collapse in demand and the lack of their workforce. Of course, the different issues is in countries, including the United States, in which there are a large fraction of the workforce who are not covered by
Stefano, we are you.
We lost you, Stefano.
Individuals, I think. Sorry, can you hear me?
That's okay. Yeah, now it's okay.
So the one point on the helicopter drop of money and what it goes to workers, I think it depends on the safety net that exists in the countries. My major, and I think a number of you have mentioned that, even leaving aside for a second developing emerging economies that those work in the informal sector, is that even in the OECD countries, the social protection systems have significant gaps in terms of protection of some of the atypical workers or non-standard workers, independent workers to some extent, gig workers, or even some of those in short-term ski work, short-term contract, and so on. We have just issued a chapter of the employment outlook that shows that even employment benefit doesn't really reach out those with intermittent career and different type of contract, including fixed-term contract and part-time contract. Thank you.
Thank you, Stefano. Renat or Thomas, do you have any remarks?
Hi again, can you hear me?
Perfectly.
Yeah, so no, I would just agree with what Stefano just said. I mean, that was the point we tried to stress, that such a general measure, such as helicopter money, needs to be addressed in the country-specific context. And as he mentioned, if you already have a social safety net in place that is covering, for instance, income support for workers. I mean, in our case, we also propose liquidity to companies, not to households, because we are not dealing with a crisis that needs a demand stimulus at the moment, but liquidity that needs to be provided. That's the only thing I would add.
Thank you. Any further remark?
Roberto, if I could also
sorry,
chip in.
sorry, Manuel.
Yeah, I think on the question of the informal economy, I think, well, first of all, we all know that it's a very heterogeneous situation of informal employees. But for instance, in Latin America, on average, 28% of total employment is self-employment, only that category. And then around 7% of total employment is domestic employees, huge numbers. So I think in terms of the informal economy, the key question here is the social policy programs. Some countries in Latin America and in other parts of the world have a strong social transfer programs already well established, with strong institutions, with very good platforms, internet and electronic modern technology platforms. So those countries are in a much better position to scale up. And if you have good databases and so on, you can do a lot of micro, very well targeted expansions of those programs. If countries do not have those systems, then it's a bigger challenge. And one of the response here that we are seeing, even in the United States, is this idea which is similar to the universal basic income. I mean, in the sense that it's just give a check of X amount of money to certain groups and do it in the quickest way possible. Just put money in the hands of people to the extent that you can. I think that's the type of answers for the informal economy. Of course, again, it goes back to the fiscal issue, how much money, how much it costs. The advantage is that we're talking about a temporary measure here. It would be for a couple of months or 3 months, but that would be very helpful for the families and for the people, and it will be helpful in terms of aggregate demand whenever people, again, can move and shop around. And secondly, in terms of the fiscal space, I already mentioned, I think international cooperation, as Stefano said, and specifically, I think some countries should begin talking with the IMF, with the World Bank, with regional development banks. I can tell you that Costa Rica, my own country, where I'm now, the Congress just approved a loan by the Andean Development Corporation, $500 million, which is going to go 100% to response to the crisis. And there is another 300 million loan with the Inter-American Development Bank. So we're talking about 800 million already. And that's not just the only pocket. There is also some tax measures and so on. The fiscal response package in Costa Rica at the moment is 3% of GDP, which is a huge, effort for the country. Is around $2,000 million.
Hello, this is Renate. Can you hear me? I just wanted
Perfect.
to make two comments. The first one on the informality and on the measures. You probably have had the news as well that India, Mr. Narendra Modi has announced that he will have a complete lockdown, so that people are confined to their houses, whether they work informally or formally. They will not be able to leave their houses for the next time. So that will, of course, make it difficult even for the informal economy, or even for people to spend their helicopter money if they get it. But these are very drastic measures, which probably will be taken by other countries as well. And last remark, what we should focus on as well, and there it would be very interesting to have input from companies, maybe IOE and BIAC can organize that, is what does this now mean for the organization or the architecture of supply chains? We have heard that India has sort of blocked all export of chloroquine, they call it in French, which is a malaria medicine, which seems to have also an effect in combating this coronavirus disease. And most European and US American companies are actually having their production in and buying their chloroquine in India. So what does this mean for these companies? Will they change their production architecture, their supply chains? What will be the impact in this regard? I think that's an important issue to focus on also from our point of view, from the company's point of view. Thank you. And thank you for organizing this. I think it was very, very interesting. Thanks to everybody.
Thanks to all of you. I think it has been the result of a teamwork, and also my team the IOE team has been doing really great. I just want to sum up. I mean, the issue related to disruption of supply chains is a question that we will take also into consideration for further exchanges. I just want to tell all of you that for us, the issue is not just the exchange that we have had, which has been very helpful also, is to identify good guidance for all of you, and we will be working also on a qualitative outcome out of this exchange, and we'll provide it to you. Also to remind you that tomorrow we will be organizing also another exchange, but this one will be with the World Health Organization and much more focused on the health systems and how the private sector can contribute better to assure in these emergency situations to the health systems. Well, finally, thank you to all of you who have been participating. We have had more than 120 participants, which already says a lot about the capacity of the tools, digital tools, also to gather people, but also to the capacity, to the attraction of this topic. We look forward to hear from you. This is an ongoing discussion, and we wish you a safe scenario in the coming days. Also, be patient, and let's hope that we recover as soon as possible. We'll be supporting you. Thank you so much to all of you.
Thank you.
To all the panelists. To Stefano, Renate, Jose Manuel, also the most patient one because we had to cut him.
No problem. Thanks for the invitation.
And of course to Sangheon and Thomas. We'll be sharing with all of you all this the registration of this exchange, and also we'll be sharing also the PowerPoint presentations.
Thank you, Roberto. Excellent.
Thanks to you.
Thank you, Roberto. This is Hiro. Thank you.
Thank you, Hiro. Mahfoud.
Thank you, Roberto.
Thank you for sharing the presentation.
Thanks to you. Thanks to you.